How America Became Rich, the Surge of U.S. Banks, Corporations, and Affluent Entrepreneurs. How America First Achieved Economic Independence from Europe, and the Pivotal Role of Banks in America's Rise to Prominence. Historically, during war times, governments struggled to fund their military efforts due to inadequate tax infrastructure, and thus exposing nations at war. Merchant banks stepped in, serving as de facto treasury departments or central banks before economic governance became a state responsibility. The prestigious leading London-based banks like Rothschilds and Barings didn't lend their own capital, instead orchestrating large-scale bond issuances. Operating at the intersection of politics and economics, they even managed foreign exchange transactions and distributed dividends on government bonds, amassing immense power. U.S. Industrial Revolution and banks. In the United States during the late 1800s, the ascendance of financial influence coincided with the emergence of rail networks and heavy manufacturing, new ventures requiring investment beyond the means of even the most affluent individuals or families. Despite these enormous capital needs, financial markets were localized and restricted in scope. At the time, there were no government agencies to oversee securities offerings or prospectuses, and the financier became crucial to their operation. He distributed the economy's limited credit, and his endorsement alone reassured investors that untested companies were reliable. In the early stages of the Industrial Revolution, companies were dynamic but extremely unstable. Moreover, in this atmosphere of frenzied growth, many businesses fell prey to deceitful promoters, swindlers, and stock speculators. Even visionary entrepreneurs often lacked the administrative expertise necessary to transform their innovations into national industries, and no corps of professional administrators yet existed. Financiers had to vouch for securities, and often ended up managing companies if they defaulted. As the bankers' power grew, their grip on industry tightening like a velvet vise. As the barons of finance, they dictated the fate of companies, exacting tributes from clients who came cap in hand, bearing letters of introduction from the esteemed halls of London to the bright lights of New York. Among their sacred codes, banks remained passive, awaiting the worthy. They refrained from cutthroat competition, respecting the exclusive territories of their peers. And they wielded immense influence over sovereign nations, advising kings and queens, with each nation having its traditional banker. In this rarefied world, power was the ultimate currency. The ascendancy of banking. Influence over nations. In the shadowy realm of high finance, powerful European banks like Rothschild and Barings pulled the strings of nations' fortunes. Lionel Rothschild's cunning deal in 1875 secured £4 million to wrest the Suez Canal from France, cementing Britain's grip on global trade. Meanwhile, Barings masterminded the Louisiana Purchase, financed France's Waterloo Indemnity, and orchestrated Peel's Brimstone, a lifeline of American corn and Indian meal to famine-stricken Ireland in 1845. By the U.S. Civil War, 1861 to 1865, Barings was the trusted agent for a who's who of nations: Russia, Norway, Austria, Chile, Argentina, Canada, Australia, and the United States. The fate of empires hung in the balance as these banking titans gambled with the wealth of nations. France's conquest and the rise of America's J.P. Morgan. The exclusive realm of the Rothschilds and the Barings was the one that the House of Morgan, J.P. Morgan, strove to emulate, a world previously inaccessible to Americans. The father of the bank's founder, Junius Morgan, seized his chance in 1870 to join the powerful financial institutions. In September 1870, Prussia, modern-day Germany, defeated French forces at Sedan, capturing Emperor Napoleon III and laying siege to Paris. Otto von Bismarck, the Prussian chancellor, attempted to diplomatically isolate France and campaigned that a victorious Germany would prompt France to default on its debt. Barings had issued Prussian bonds and didn't want to jeopardize sensitive relations by dealing with France. Meanwhile, the Rothschilds deemed the French cause futile. Junius Morgan seized the chance to support France by spearheading a syndicate issue worth £10 million. equivalent to $50 million at the time. The French also aimed to acquire American weaponry by collaborating with an American financial institution. It's rumored that to back France, Junius had to outmaneuver Bismarck, who was kept informed of his actions through a German spy embedded in the French finance minister's office, providing daily reports. Junius Morgan offered the French bonds at 85% of their face value, a discounted rate intended to entice cautious investors. However, this perceived slight made the French feel pressured by these humiliating terms. Initially, the risk seemed justified as the bond price plummeted to 55 in January 1871 following the Paris Commune. Desperate to stabilize the market, Junius Morgan bought up the bonds, nearly depleting his resources. Ultimately, when the war ended, the defeated French surprisingly repaid the loan in full, with interest, in 1873, earning J.S. Morgan & Co. a substantial profit of £1.5 million. The expansion of American railways and industry. Following the Civil War, the rapid development of the American railway network enabled a significant surge in capacity, greatly benefiting American banks. Within 8 years, the railroad trackage more than doubled to 70,000 miles, unlocking resources in the American wilderness. This massive rollout led to the establishment of new towns along the rail network, populated by European immigrants. Concurrently, banks like J.P. Morgan and Joseph Seligman attracted investments from London and Germany respectively to finance the railroads. Despite the industry and banks receiving significant funding from European capital, the 1873 panic exposed widespread fraud and corruption, marking the downfall of established European investors and the rise of the House of Morgan as a global banking powerhouse. A prolonged period of economic downturn and stagnation struck, causing a catastrophic blow to European investors who lost a staggering $600 million in American railroad equities. During this turmoil, Andrew Carnegie convinced the Morgans to sell his stake in a railroad for $10,000. Additionally, he secured funding for his inaugural rolling mill by negotiating bonds with Junius Morgan. Unlike European banks, J.P. Morgan made a tidy profit of $1 million, but opted to limit future dealings to esteemed companies as he rose to prominence, an accomplishment that the future J.P. Morgan Bank would continue to achieve in times of financial strife. Business mogul John D. Rockefeller viewed the slump as an opportunity to transform his consolidation plans in the oil sector into reality. By slashing Standard Oil's dividend, he boosted its cash reserves to capitalize on rival companies selling at distressed prices. Standard Oil navigated the 6-year depression superbly, absorbing 20 out of 21 Pittsburgh refiners, which Rockefeller attributed to its prudent financial strategy and unmatched access to bank credit and investor funds. The transportation of oil, once limited to barrels, was revolutionized with the advent of tank cars. Then the rail companies hesitated to invest in specialty wagons that couldn't also haul general cargo, so Rockefeller took decisive action. In 1874, Standard Oil, with a calculated concern for the rail company's interests that skillfully bound them with numerous obligations, began to raise substantial funds to construct oil transport vehicles, which they would then rent to the railroads for a special mileage fee. From then on, Standard Oil Company, which owned all the Erie and New York Central oil transport vehicles, and John D. Rockefeller, poised to become the wealthiest individual and financier in America, had secured an unshakable advantage, ensuring that, alongside influential figures like J.P. Morgan and Andrew Carnegie, the United States would confidently march into the new century, no longer reliant on nor paying tribute to British and European capital. Thank you for watching. Please like and share this video. Kindly subscribe for more intriguing videos. Lessons Untold. Relax, review, reflect.